One decision from Beijing, and billions of U.S. investments were frozen overnight. President Trump just imposed a 145% tariff on all goods from China. China responded with investment bans and tariffs in return. The question is this the start of an unprecedented trade war? Do you think the US or China will win this confrontation? Or will there be no winner? The U.S.-China trade war didn't begin overnight. It's the result of over a decade of simmering tensions rooted in deep concerns over technology, intellectual property, and global power dynamics. In 2018, under President Trump's first term, the U.S. launched a series of tariffs on Chinese goods, accusing Beijing of unfair subsidies and intellectual property theft. China responded swiftly with retaliatory tariffs. By 2020, the COVID-19 pandemic exposed the world's dependence on Chinese manufacturing, from medical supplies to semiconductor parts, especially for the U.S. In 2023 to 2024, tensions escalated further as the U.S. introduced several new laws targeting Chinese technology, including the CHIPS Act and a total ban on Huawei. China denounced these moves as modern protectionism, while the U.S. framed them as strategic defense in a new era of technological rivalry. Experts say the U.S. is not just concerned about the economy, but also about a long-term strategic threat. If China dominates core technology industries such as AI, semiconductors, and green energy, the world order could change. Trade, technology, and national security are closely linked. And when political trust between the two superpowers collapses, economic relations are unlikely to fully recover. On April 14, 2025, President Donald Trump enacted an unprecedented decision, raising tariffs on all Chinese imports, with rates reaching up to 145%. According to the official White House statement, the policy took effect immediately, covering everything from electronics, machinery, apparel, to consumer goods and critical tech components. It marks the first time since the Cold War that the U.S. imposed such sweeping tariffs on a major trading partner. In a press conference, Trump declared, "We will no longer allow China to bleed America's industries dry. It's time to take back control." He also revealed that a new wave of tariffs targeting semiconductors will be announced next week, signaling a strategic move in the global tech rivalry. Importantly, other nations are temporarily exempted for 90 days, indicating that this escalation is laser-focused on China. China accounts for about 17% of total U.S. imports, 2024. Top 5 product groups directly affected: phones and components, iPhones assembled in China, household appliances, electronic components, chips, circuit boards, iron and steel, industrial aluminum, clothing, footwear. The high tariffs will increase production costs for U.S. companies that rely on Chinese raw materials and components, especially in the technology, electric vehicle, and AI industries. However, the White House hopes that this tax will force corporations to reposition their supply chains, moving to countries like India, Vietnam, Mexico. This is Trump's biggest gamble since the beginning of his second term, and could change the global balance in the next 6 months. China didn't wait long to strike back. Just 12 hours after the U.S. announced its 145% tariff package, China's National Development and Reform Commission, NDRC, issued a directive to tighten all outbound investment approvals, particularly targeting the U.S. This move is widely interpreted as a targeted capital freeze, directly affecting sectors like real estate, chip manufacturing, energy, and financial services within the U.S. Simultaneously, China increased import tariffs on U.S. goods to an average of 125%, targeting electric vehicles and auto parts, soybeans, corn, and beef, high-tech products like computers, sensors, and precision equipment. Moreover, 28 American companies, including Nvidia, Micron, and Honeywell, were placed on Beijing's unreliable entity list, restricting their export rights, market access, and partnerships. In a sharply worded statement, a Chinese Foreign Ministry spokesperson declared, "If the U.S. chooses confrontation, we will respond fully." Beijing doesn't want a trade war, but it is not afraid of one. U.S. industries most dependent on Chinese investment, battery projects, real estate, AI. U.S. exports to China directly affected, soybeans, 40% of exports to China, Tesla electric cars made in the U.S. Beijing's retaliation is a combination of economics and geopolitical strategy, not only causing immediate damage, but also creating long-term uncertainty for U.S. businesses investing in China. Putting companies like Nvidia on the list could severely impact the global AI and semiconductor supply chain. The biggest risk? Some analysts warn that Beijing could restrict exports of rare earths, essential materials for defense technology and electric vehicles, to put maximum pressure on Washington. Beijing is playing a game of reverse bowstringing. It doesn't shoot right away, but it keeps the bowstring taut. When the world's two largest economies clash, global markets don't just watch, they react. Immediately after President Trump's 145% tariff announcement, U.S. financial markets were rattled. The Dow Jones dropped 784 points in a single day, marking its steepest decline since October 2022. The Nasdaq Composite plunged over 3.2%, with major tech stocks like Apple, Nvidia, and Tesla leading the losses. The S&P 500, a benchmark for the U.S. economy, sank more than 2.5%. In Asia, Shanghai Composite and Hang Seng Index fell over 4%, as investors feared retaliatory measures from Washington. Chinese tech exporters saw sharp stock sell-offs. In Europe, Germany's DAX and France's CAC 40 also dropped by more than 2%, as multinational corporations braced for a potentially globalized trade crisis. Nvidia shares fell 6.7% in one day, after being added to China's blacklist. U.S. bond yields rose slightly, as investors turned to safe haven assets. Bitcoin and gold surged, as a defensive reaction to economic turmoil. The psychological impact on the market is clear. Investors are worried about the disruption of global supply chains, especially in industries such as electronics, electric vehicles, and clean energy. U.S. companies will suffer a double blow: higher costs due to tariffs and the possibility of losing market share in China. We are seeing a wave of capital out of risky assets and back into safe havens such as gold and bonds. If the situation continues to escalate, the U.S. market could enter a negative quarter. What began as lines of economic policy is now shaking the real world. President Trump's tariff war and China's harsh retaliation are not just bilateral moves, they are reshaping how the global economy functions. We've covered unprecedented U.S. tariff decisions, China's strategic countermeasures, the sharp shock to financial markets, global reactions and realignments, and 3 potential scenarios shaping the future. The most dangerous thing is not higher taxes, it's uncertainty. In an unstable world, businesses, investors, and even governments must ask, where do we stand? And how do we prepare for what's next? We are not just witnessing a trade war, but a reshaping of global power. Leave a comment: do you think the US or China will win this confrontation? Or will there be no winner? Don't forget to like and subscribe to not miss the next analysis.